After another year of strong growth, what does 2017 hold for the Melbourne property market? In the next few minutes, I will briefly review the year that was 2016 and give you Wakelin Property Advisory's outlook for 2017. In 2015, we predicted that 2016 would see Melbourne property prices continue to grow, in particular if they were aided by interest rate cuts. And with 25 basis point rate cuts in March and August, interest rates reached a new low of 1.5%, so it's not surprising to see such strong growth. As always, there were sections of the market that performed better than others, and 2016 was the year of the house. Median price for inner Melbourne houses increased by around 8% compared to just over 2% for units over the year to December 2016. Clearly, apartments did not perform with the same enthusiasm as houses. Even the performance of period or older style apartments was sluggish in 2016 across Melbourne, with activity, rental and capital growth rates measured relative to houses. This section of the market was affected by the overstocked high-rise sector. We have been warning for years now to be wary of the larger number of new developments turning up around Melbourne, and 2016 proved our fears to be correct, with the large difference in growth in median price between houses and apartments. Auction stock levels in 2016 were comparatively low, making it one of the best vendor markets in recent times. The year itself was host to very few Super Saturdays, days when over 1,000 auctions were hosted, especially when compared to 2014 and 2015. The 2016 spring property market saw strong demand. With stock levels lower than usual, buyer numbers did not drop off, resulting in the year ending with high clearance rates and many buyers still looking. So what does this mean for 2017? With 2016 finishing in strides, 2017 promises to be an exciting year. While some are expecting a slowdown, this isn't likely to happen, particularly when looking at investment-grade properties. I think it will take a couple of auction weekends before people realise just how hot this market is. Once acceptance of this strength becomes mainstream, I would expect the market to experience a quick growth spurt of around 5% leading up to Easter. At this time, I anticipate more measured growth through the rest of the year, culminating with up to 10% annual growth. Of course, this growth will not be uniform, with different suburbs and property types performing differently. While I expect houses to start the year vigorously, carrying through their momentum from the end of last year, I see 2017 as the year that older style apartments start their comeback. The performance of houses will make them unaffordable for many and will trigger an influx of prospective buyers into apartments as we head into the second half of the year. This additional attention will help apartments recover from their present undervalued state. Of course, 2017 will see many different factors impact the apartment market. 2016 saw the beginning of the slowdown in the high-rise apartment market. ABS data evaluating the number of approvals from the 11th month period to November 2016 compared to the same period in 2015 saw approvals in Melbourne drop by 10.6%. 2017 should herald the continued shrinkage of new supply and prices in this category, with buyers seeking quality over quantity and developers becoming more cautious. Similarly, not all locations will perform uniformly. As per usual, the strongest performing markets can be found in inner and middle ring suburbs. These areas are rich in period homes and apartments that are consistently in high demand. While the inner east has perhaps been the strongest performer for quite a few years and will perform again this year, I see 2017 as the year of the inner north. The inner north market ended 2016 spectacularly with intense demand for properties under 2 million, which promises a good 2017. Will stock levels recover in 2017 and help beleaguered buyers? Now, this shortage of stock is primarily the result of 4 years of buoyant sales volumes exhausting the pool of discretionary vendors. Eventually, we would expect to see more potential vendors driven to sell by the alluring signal of sustained price growth. There are tentative signs that stock levels may be higher this autumn than 12 months ago. However, I would not expect the supply levels to improve materially until at least sometime after mid-2017. To help you prepare for the year ahead, I'm going to give you a region-specific analysis. I will give you benchmarks for investment-grade property prices from when the market ended in December last year. I'll then give my view about where these benchmarks will be later in the year. Buying units in inner eastern suburbs such as Richmond, Hawthorn, Abbotsford and Kew in late 2016 required a budget between $400,000 and $650,000, with 2-bedroom apartments reaching $600,000 plus. Houses in the area were posting prices between $1.2 million to $1.7 million for a 2-bedroom house. In one of the higher end suburbs, Hawthorn, we saw price ranges increase slightly. You wouldn't find much in the way of houses in Hawthorn for under 1.3 million last year, with a well-renovated 2-bedroom house going for up to 1.7 million. So where should these price ranges be at the end of this year? 1-bedroom apartments will start around the $450,000 range, with the higher end at $650,000 to $700,000. 2-bedroom apartments will go for $650,000 plus. For 2-bedroom houses in the inner east, you'll be looking at around 1.3 to 1.9 million. This means that those houses in Hawthorn will be going for 1.4 million to 1.9 million. As of December 2016, 2-bedroom houses in the inner Bayside area were selling between 1.3 million to 2 million, a 1-bedroom apartment for 450,000 and a 2-bedroom for 600,000 plus. Looking ahead to the end of 2017, we will see inner Bayside 2-bedroom houses going from 1.4 million to over 2 million, with 1-bedroom apartments going for 500,000 plus and 2-bedroom apartments for 650,000 plus. In December last year, 2-bedroom homes in the Bayside suburb of Middle Park were going for upwards of 1.5 million. Elwood, a Bayside suburb for those looking to buy a quality apartment, now has a benchmark for 1-bedroom apartments of 450,000 plus and 600,000 plus for 2 bedrooms. Come the end of this year, a house in Middle Park will transact for upwards of 1.6 million, while Elwood Apartments will be selling at 500,000 plus for a 1-bedroom and 650,000 plus for apartments with 2 bedrooms. Now, let's look into the inner southeast. In December 2016, a 2-bedroom home here would collect 1.2 million plus, while apartments went for 450,000 plus for 1 bedroom and 600,000 plus for 2 bedrooms. Let's look closer into the area and focus on Armadale. Prospective buyers had to spend 1.5 million plus for a 2-bedroom home in December, 500,000 plus for a 1-bedroom apartment and 600,000 plus for a 2-bedroom apartment. By the end of 2017, property buyers in the inner southeast will need revised budgets of 1.3 million plus for a house, 500,000 plus for a 1-bedroom apartment and 650,000 plus for 2 bedrooms. In Armadale, you should expect to see homes going for 1.6 million plus, while a 1-bedroom apartment will cost around 550,000. 2-bedroom apartments will follow the trend for the area and be priced around 650,000 plus. As I mentioned earlier, the inner north, such as Northcote and Thornbury, was one of the strongest performers at the end of last year, with a 2-bedroom home in the area typically going for 950,000 to 1.8 million, a 1-bedroom apartment for 450,000 plus, and a 2-bedroom apartment for 550,000 plus. Crystal gazing to year's end, we see quality homes on the lower end of the price range in the inner north reach the $1 million mark, while the higher end will be close to 2 million. Apartments will move to 500,000 plus for 1 bedroom and 600,000 plus for 2 bedrooms. Carlton North is one of the few suburbs in the inner north that has a good cross-section of both houses and apartments. Carlton North is at the higher price end of the inner north, with a 2-bedroom house last year requiring a budget of 1.3 million plus, a 1-bedroom apartment requiring 500,000 plus, and a 2-bedroom apartment 600,000 plus. By the end of 2017, houses in Carlton North are likely to be selling for $1.4 million plus, while apartment buyers will need a revised budget of upward of 550,000 for 1 bedroom and 650,000 plus for 2. The best approach to buying in 2017 is research and preparation. With the property year only just beginning, start doing the legwork and using the information I've discussed today to find yourself a good buy. Happy property hunting in 2017.